Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Elliott Wave Trading, our website is www.24elliottwave.com. And the title of the video is how to count Elliott waves at a cycle point. How to count Elliott waves at a cycle point. All right, we're going to go now to the hourly chart. The currency pair that we are trading here is the dollar-yen currency pair. So on this hourly chart, following our guidelines, we know that the first wave is the wave that breaks out of the consolidation zone. So you can see in this section here, where we have a balanced market. So there was a consolidation on this hourly chart in this session here, and then we have a breakout. The first Elliott wave is the wave that will break out of the consolidation zone. So in order to identify the first Elliott wave, we use either a consolidation, a market pattern, or a cycle point. In this video, I'm going to show you how to count Elliott wave at a cycle point. I need to remind trader that the cycle point is my own proprietary tool that I have shared with the public at on YouTube for the first time. Okay, so we have here a consolidation that was taking place here, and then we see this move all the way up here, and then a pullback here. So they move from here all the way here, which are labeled in orange here. This is the first Elliott wave. The red line here, then we have a pullback. This is the second wave. In normal condition here, this session here, the price move from here to here. This is what I'm putting, you see this section here, is the third wave that has failed. What I would like to call an aborted third Elliott wave. So we have the first wave, second wave, and the third wave was underway here. But as you can see, the third wave, when it started going up, it has failed here. This is something that a lot of traders get into trouble with, because sometimes a cycle may start, okay, but a cycle will fail. For traders that are using a TSTW SY008, you need to understand that sometimes you will see that a cycle will start, but the cycle will fail prematurely for different reasons, either for fundamental reason or because of the economy news or because of the market sentiment. This is one example here. So we have the first wave, and this is the second wave in red. Here the price was going up, trying to achieve the third Elliott wave. See, from this session, he was trying to achieve the third Elliott wave. But as you can see, the price didn't go up very much. So this is a failure. Okay, this is a failure of the third Elliott wave. Sometimes traders, when they are counting Elliott wave, there are sometimes a distortion. This is a distortion here. This move up and down is a distortion. Please feel free to disagree with my wave count, okay? Because some traders may say something else, blah, blah, blah. But I disagree, because as you can see, the price was attempting to go up in this session, but it has failed. All right. Some traders may label this move 1, 2, 3 as the second wave. I don't want to label this 1, 2, 3 as the first wave, as the second wave. All right. I don't want to label this, because in my view, this move from here to here is in fact the third wave that has failed. So it was going down first, and then it has failed completely. All right. But some traders may say, okay, this is 1, 2, 3. This is the second wave. I disagree. In my view, this move from here to here, this is the third wave, which has failed. As you can see, after it has failed, now we have the real third Elliott wave here, which is the turquoise line here. All right. Now, on this hourly chart, it may look a bit different for you. You may think that, okay, what is he talking about? But hold on a second, because when we are counting Elliott wave, we don't count Elliott wave on one time frame. We must use a multiple time frame. All right. Now, I don't want the video to be too long, so I will refer traders back to our website, 24 Elliott Wave. Okay, check our webpage, okay, how to count Elliott Wave, and also our YouTube channel, www.youtube.com/user/24 Elliott Wave, and check our video about how to count Elliott Wave, where I explain to traders, okay, the distortion and the guideline that we follow when we are counting Elliott Wave. So I will not repeat myself in this video. If you are new to us, I will refer you back to our YouTube channel or our website. Okay. So this move from here to here is a failure of the third Elliott Wave. Okay, because it has cancelled it. But sometimes they may say this is a 1, 2, 3, and they will label this a second wave. The most important thing is to count the wave in the direction of the trend. As you can see, I have a rising channel here. It's telling me that the trend is up, yes or no? But my wave count is this: first wave, second wave. This move in this section here, this is a distortion, followed by the third Elliott wave here, and then the fourth Elliott wave, and the fifth wave here. Some trader may say, okay, George, it looks to me that the fifth wave went all the way up here. Now, this is not, the fifth wave did not go all the way up here. The move that we see in this session here, are you with me in this session here? This is a correction, which is a bit messy. This is a messy correction taking place here. How do I know? I use the Fibonacci, okay, extension tool. After I count the fifth wave, after I have counted the fifth wave, traders who understand the flat correction, again, I will refer traders back to our website or our YouTube channel. What is the flat correction? How to trade the flat correction? The flat correction is a beautiful Elliott wave pattern that is very, very useful for day traders. The level we are watching is 138% Fibonacci extension zone right here. As you can see, the fifth wave ended here. When I use my Fibonacci extension for the fifth wave alone, we see that the price has stopped in the zone, okay, not exactly on the dot, but in the zone of 138% Fibonacci extension zone. All right, I will call her this is the 138. Can you see on my chart? 138% Fibonacci extension zone. That's the green line here. So my fifth wave has ended here. I'm on the hourly chart. I will not stop on the hourly chart. Now let's move now to the daily chart, and I want to show you what we call a cycle point. This is the daily chart. Look carefully. All right, this is my drawing from the hourly chart. Okay, you can see here, this is my first wave from here to here, my second wave here. You can see that the price went all the way up here. You see this candle here? All right, it went up all the way here. This is the failure of the third Elliott wave. But if you were on the hourly, on the daily chart, you have handled it, you will say that, okay, this is the second wave, which is a kind of a horizontal price move. But you can see that this candle here on the daily chart went up a bit, which is in fact the third wave that has failed, as I have shown you on the hourly chart. Okay, so my drawing is still on the chart: first wave, second wave, and you can see my third Elliott wave. You see here, it went up, it slowed down. The correction is when the price is slowing down. Okay, first wave, which is an impulsive wave; a correction, which is a slowing period, the price slowing down; a contra trend, followed by another extension. This is the third Elliott wave right here, as I have shown you on the hourly chart. You see my turquoise line, followed by the fourth wave. And now here you can see again my fifth wave has ended here. But if you were on the hourly chart, you will have extended it all the way up here. That's why we do not use one single time frame to when we are counting Elliott wave. So the hourly chart allow me to see the internal wave. So for instance, if I did count my wave on the daily chart, if I have started counting my wave on a daily chart, probably I will have labeled this section here second wave, and I will have labeled this from here all the way to the top as the fifth wave. But as I would That's why I said to you, you do not stop on one single time frame. Then if I switch to the lower time frame, when we go to the lower time frame, we are trying to see, okay, to analyze the internal waves. Now what I have done, I've started from the hourly chart, then I come to the higher time frame. So the hourly chart is providing me with the internal waves, okay, of the daily charts, of the wave of the daily chart. Are you with me? A wave of a higher degree on the daily chart. But in fact, it's the same wave, but from the hourly chart, I can see clearly, because when we go to the lower time frame, we are zooming into the price. When we are going to the higher time frame, we are zooming out of the price. Though it is the same financial instrument, we are looking at it from different angle. All right? Okay? So you see now, so from now everything add up nicely. First wave, second wave, third wave, fourth wave, fifth wave. We know now this is a correction. If we did stop on the daily chart, we will know that this section here is a correction. Never use one single time frame when you are counting wave. Now let's go back now to the cycle point, because this video is about how to count Elliott wave at a cycle point. On the daily chart, we have a cycle point. Now, what is a cycle point? Simple. Very simple tool that I have created, that I share with trader on YouTube. You see the price, okay? Price, for instance, the price start going down all the way here, and then go back to the starting point. This is a cycle point. So if this horizontal line here is a cycle point, because the price went down from here, the price has started going down from here all the way here, and then return back to the starting point. Very often, this is another guideline. Very often, you see that the first Elliott wave will also break out of the cycle point. It doesn't mean that always we have a cycle from the cycle point, but very often we can see an Elliott wave cycle that can start from the cycle point. There is another cycle point which means the price went up first, okay, and then goes back down to the starting point. So this horizontal line here is a cycle point. Sometimes you will see that the first Elliott wave will break out of the cycle point. So we know that the first Elliott wave can break out of a consolidation zone, can also break out of a cycle point. So this is the reason why we are recording this video, to share with traders today how we can count Elliott wave, okay, at a cycle point. So now we understand what is a cycle point, okay. I'm going to move on very swiftly because I don't want the video to be too long. I want you to focus carefully to what we are doing here. All right. So on this daily chart, what do we see? Okay. So my first wave has started here. Why is it a cycle point? Look at it. Okay. You see here. So the price, you see in this section here, went down. Yes or no? It went down. Okay. It went down. And then what it did, it returned back to the starting point. So if I color this line now into red, all right, the red line is a cycle point. It went down and it went back to the starting point. You can see that the price break first out of the cycle point, but has cancelled it. So if we start counting it here as the first wave, it has cancelled it. So when one of our guidelines at 2-4 Elliott wave, when a wave is cancelled, what do we need to do? We need to restart counting the wave. As you can see here, it break out and then it cancel it. So we restart counting it. That's why you see here, first Elliott wave. So the wave count that we have done today is this wave count is from a cycle point. Okay, this wave count is from a cycle point. So you see the red line is a cycle point, and we have first wave, second wave, third wave, okay, fourth wave, and the fifth wave, followed by the correction. The red line right here is a cycle point. I can extend it on my chart like this. So look out for the cycle point. You see on the hourly chart, you see on the 30-minute chart, you see on the every time frame, on the weekly chart, on the monthly chart, and you can see it on the quarterly chart, okay, on the 2 days chart, on the 3 days chart, on the 4-hour chart, on the 2-hour chart. Okay, it's a powerful tool. It allows traders to make excellent decisions, because some people were selling at this point, okay, price went down, but for one reason or another, the price returned back to the starting point. This is a kind of equilibrium price level. So very often, either a new cycle will start at the cycle point, or the price will resume the previous one, which means it will go down again from this point, because you know it went down first from here. Some people were selling here. If you come back here, the first attempt is to sell it, because somebody sold it here. It go back to the same point. The first thing that is coming to traders' mind is to sell it again. But for one reason or another, because somebody sold it here, but this time no one is selling it. So what's going to happen? So there is no more supplies. There is no more distribution taking place here at the time when the price returned back at the same point. Here there was a distribution taking place, which means traders were selling here, but as the price returned back to the same point where they were selling, there is no more, okay, attempt to sell it. So it's a reversal. The price has a high chance to go up. If we see the first Elliott wave from this point and followed by a second Elliott wave, you can be very patient at a cycle point, allow it to go up, and then pull back and be ready to catch the third Elliott wave. And you can just take profit at the end of the third Elliott wave and then go away. If you check our webpage that we call Wave Genius, you'll be able to know where the third Elliott wave is likely to end. All right, I've got 4 minutes left for this recording. Okay, so this is a cycle point, and we see first wave, second wave, third wave, fourth wave, and a fifth wave. This is how one can count Elliott waves at a cycle point. You want to understand what is a cycle point. As you can see, I do not use one single time frame. I do not stop on the hourly chart alone. I have started counting the wave on the hourly chart. There was a distortion here, which is a bit tricky for traders. But even if you did not recognize the distortion, all right, you will have said that, okay, 1, 2, 3 is a correction. So far, it's not too bad, because you'll be able to catch the third Elliott wave. So the disagreement is pointless, okay? So you may disagree that, okay, George, this is not the second wave, it's 1, 2, 3. But at the end of the day, we come to the same point, because I am saying that this is a distortion taking place here, and I'm following this by the third Elliott wave, all right? All right? But as I show you in this video, one should not use one single time frame if one is using the Elliott wave. One thing also I need to mention in this video, talking about how to count Elliott wave at a cycle point, which is very, very important. This is one thing I was telling traders all the time, TSCW24 traders, TSCW008 traders. For a bullish cycle, we always start from a support level, either a key levels, an equilibrium price level, a psychological price level, or a cycle point. So we want to know where are the key levels. So a bullish cycle or a bearish cycle will start from a key levels. Bullish cycle will start from, okay, a valid support level. Bearish trend will start from where? Okay, a valid resistance level. So here, I know that this red line is a very important level on this hourly chart. It's a cycle point. All I need to do is to monitor carefully what is taking place around these key levels. If you are using the TSTW24 or the SYS008, all I have said to you when we try to watch the videos at your website, okay, and then pay attention carefully. The bread and butter of trading is about support, resistance, trend line, and channel, which are the market patterns. Whether we are using Elliott wave, Fibonacci, or any trading tool, we must always make our decision around key levels. All right? Do not trade in the void. Very, very important. As you can see here, my wave count has started from a key levels, in this case, a cycle point. All right? 1, 2, 3, 4, 5, followed by, okay, a correction. A flat correction is a very, very important Elliott wave pattern, and traders must, okay, do their best, okay, to master, okay, the flat correction. So as you can see, 138%, Fibonacci extension ended here, all right, and the price started holding it down. We are assuming that this pair, this USD yen, I'm recording this video today, it's a bit late in London now, 2:42 a.m. in London. On the 22nd of September, we are expecting the dollar yen to pull back a bit because we counted 5 waves plus a correction. Thank you for watching, and then we will speak to you very soon. This is about how to count Elliott wave at a cycle point. We are the TSTW 24 traders. Speak to you soon.